everyone. My name is Jaden Falds. I'm part of the Vancouver Startup Week team. I'd like to take a moment to acknowledge that we are grateful to be virtually gathered on Indigenous land, regardless of where you are joining us from. And I am grateful to be on the traditional, ancestral, and unceded territory of the Musqueam, Tsleil-Waututh, and Squamish peoples. I am privileged to live, work, and play on these lands. And first, I'd like to thank you for joining VSW 2021. And welcome to Leverage Government Funding to Fuel Your Business, hosted by OKR Financial. This session is part of the VSW Founder Track and is proudly supported by Sage Accounting. Sage knows you didn't start up your business to become an accountant. Sorry for any accountants. But Sage Accounting keeps your business organized and running smoothly. Track your cash flow, send invoices, and get paid quickly. Visit Sage Accounting booth to get access to free guides and templates for starting your business finances right away. Plus, get a VSW exclusive discount if you're ready to switch from Excel. I'd also like to specifically thank OKR Financial for being our event partner and also a sponsor. VSW could not happen without the continuous support from our community sponsors. During the session, if you have any questions for our speakers, please post them in the Q&A in Huva session, and we can also upvote the questions. And now I'll pass the mic over to OKR and we'll begin the session.
Thank you. So thank you, VSW. Happy to be part of the successful event that's been happening for several years now again. Welcome it. And our whole goal is to work with Canadian tech companies and help them grow. So as I start this presentation, as mentioned, fire your questions away on the Hoover app, and then I will address them as they come along while they're a hot topic, if I can. And if I don't get to anything, I'll try and use a Q&A at the end. If not, we will reach back to you to address your questions that you may have. So, I'm going to start a slideshow here, and just give me a second just to share the screen. There we go. Okay, hopefully everyone can see that. All right, so leveraging government funding to fuel your business. What does that mean? So the idea is, OKR, we specialize in certain types of non-dilutive solutions, and one of the biggest non-dilutive solutions out there for all companies, young or old, small or large, does not matter. There's government programs out there and different types of tax credits. So what we'll do is cover today's what OKR does on how we can sort of help and companies leverage this, as well as covering a little bit on the popular Canadian tax credits out there, government grants and how to sort of navigate the landscape, a little bit on asset-based lending, how young companies can leverage that, where they sort of struggle a little bit with the traditional financial services available, sort of a little bit about our process and what makes OKR different. So starting off with a little bit about OKR. So we're a young company. We've been around 5 years, and it was founded by Jason Neal and Randy Thompson, two very well-known Canadian entrepreneurs with successful exits, failures, good scale-ups, and great turnarounds. So they started this company about 5 years ago, initially to help out their own clients with utilizing the vertical of tax credit financing. We've evolved now. So as a young company, we have about 8 different funds. So we're privately funded by a variety of different investors, from regular people, angel investors, to high net worth individuals, and recently, in the last 6-7 months, family offices as well. So we currently have about $120 million of assets under management, and probably about another $150 million available for the Canadian tech ecosystem that we launched early this year. So we have a major focus on the market that we're currently in, especially for young tech and entrepreneur companies out there. So with that money, we have 3 key focuses. The first one is we specialize in bridge financing, tax credits, and government grants, and how companies can leverage those to get quick cash flow. The second area of vertical is we sort of provide traditional asset-based lending solutions and some unique and niche ones as well, where the banks and BDCs can't really help you out, and we can. And our third one is we launched our 8th fund last summer, which is our venture fund, where we're actually doing equity investments in companies anywhere from $50,000 to a couple of $1 million, and we're assisting with a few turnarounds. So those are our key 3 vertical focuses. So our goal is we're trying to solve a problem where we can help companies sort of leverage non-dilutive solutions without giving away equity too early. Because by the time they really need to make a raise, a lot of companies out there lose control when they're about to commercialize or further down the line, because they gave away equity so early. So our goal is to try and navigate how companies can maximize that. And then why do we care? Well, I mentioned 2 founders are entrepreneurs, but the rest of the management team were also all entrepreneurs and been involved in companies and understand the struggles of either finding shred financing or government grants or just raising capital beyond friends and family. So we care because we've all been there, done that, and are still involved with companies that are doing that. So what makes me an expert today? So apart from me being involved with OKR and doing this for a few years, is but prior to that, I was the managing director for one of the largest government funding consulting firms in Canada. So I had to navigate the landscape for over 6 years. I was the managing director. It's very reputable there. I've also worked with large international companies, both in the UK and out here. So working with large corporate finance companies, it's not new to me, and helping companies grow. Specialize in business development, marketing, and expanding businesses. So, and I'm on the board of many young companies as an advisor on not just raising capital, but also just navigating as a business overall on the marketing side. So the tax credit program, there's several out there. Shred, almost over 30,000 companies apply for this every year. And it's a common program, it's been around for a while. $4 billion approximately every year is given back to this program from the government initiative. And then there's over $10 billion of funding available through a variety of different government grant programs out there. And most companies don't even tap into 3 or 4 because either they just don't know how to navigate or how to maximize these programs. So when we talk about Canadian tax credits, there are 3 common tax credits, but there's more than that actually out there, but 3 major ones, especially in the tech space or the entrepreneurial space. There's the film tax credits, which is getting more and more common year after year as more productions are happening in BC and Canada alone. And there's new initiatives and further funding now available, announced by several provinces to say, hey, let's get this growing a bit quicker. The digital media tax credit's been around for quite a few years now as well. So any company that's spending a lot of money on salaries on the UI work or the front end side, on the interactive side of their tools and development can tap into this program. And then you have the Shred, which is the most common one, the largest incentive program that's out there. So I'm going to talk a bit more about Shred than the other 2, as that's the more common one currently in the market that most companies are going to be utilizing. So what is Shred? If you're not familiar with it, it's scientific research and experimental development tax credit. Been around since 1986, as I mentioned, it's the longest running incentive R&D program that's available right out there. Every Canadian entity can apply, whether it's foreign owned or large or small. It's not limited to that. And every industry can apply. So a lot of people will think, oh, scientific research, we're not doing anything innovative or crazy, we're not in a lab coat. Well, only 5% of companies are actually doing scientific research. 95% of companies that are applying for this are actually doing experimental development in some form. And going into what classifies as Shred. So a lot of companies think, well, I'm not spending money on salaries, it's a lot to do with cost. There are ways around that, and also I'll touch on that a little bit. Again, talking about industries that apply, they all apply, every single one, right? So it doesn't matter if you're in agri-tech or transportation, if there's some sort of innovation involved in what you're doing and there's some failures, you have a high chance of probably qualifying for Shred funding, tax credit. So when we think about Shred as a tax credit, it's you could be building a brand new product, straight out of there and developing it out, or you can be improving on an existing product. What does that mean? So let's say you're trying to develop a new messenger app, exactly the same as, WhatsApp that's out there. But they haven't released their formula. They haven't released their coding or how it works. You can go out there and build exactly the same thing, go through trial and error to try and improve it, make it better, your own version. That could be a shreddable project. Same thing with processes. If you're in manufacturing or agriculture and you're modifying machines to do something different or improve efficiency and just have better productivity out of it, could be a new process or the same thing. If you're going through failures and you're hitting an uncertainty, you're not sure if this is going to succeed until you go through the process and go through the work, there's potential for Shred there. So before you can think, do I have a Shred project as a company or an organization, due diligence. Check the internet. Does it exist right now? Is there a solution for it? Talk to suppliers. Is there a workaround? Does it exist? The solution out there, just no one just commercialized it, but it's out there. If it does, most likely not a Shred project. However, if there is, and you think, okay, this is something different, it is going to improve. And when I say you could reinvent the wheel, you could, especially if you're improving it with some sort of a scientific or a real reason of why you're doing it, and improving industry knowledge to say, okay, this works, this doesn't work, it can most likely qualify for shred. Simplest way I can describe shred to everyone is that think of a high school experiment. If you're going through a process where you're asking a question, you develop a hypothesis, and you run through the experiment. If you hit a roadblock, as soon as you hit your first roadblock, that's where the shred money starts. That's where every penny, every time an hour spent is now worth something as a shred claim. If the plan goes just like from A to Z with no kinks, no roadblocks, there's nothing to claim there because you didn't really learn anything as you're going through the process. It sounds really weird, but what the CRA is trying to do is they're trying to pay companies for taking risk on trying to do something different, trying to improve an industry, but really they're trying to pay you for advancing knowledge, say this works and this doesn't work. If you went through this process and you fixed it after one little tweak or a massive change, again, no shred because there wasn't real a learning opportunity or learning experience that you've just developed. You probably had the solution, you just had A or B and option B worked and that was it. But if it was option A, B, C, D, E, or F, more likely you went through more trials and more experimentation to get there. And that's what shred really is. What can you claim? So as you're claiming shred, and shred's all about after you've spent the money and after you've made some costs or spent the time that you can claim at the end of the year with your fiscal year end, typically with your taxes. Now, no one claims a day after the fiscal year end ends. It's normally a couple of months after that most companies do. So salaries, that's T4 employees, so not contractors or not someone that's working part-time. It's T4 salaries that you're doing payroll taxes that you can claim. Subcontractors, they have to be Canadian subcontractor for it to be eligible for you to claim shred. And then materials, where if you're developing a widget, anything that's about to use a prototype and that's not resold and not commercialized, or if you're in the food and beverage space and you're wasting materials as you're trying to scale up, get consistency, or whatever the project was, you can claim all those wasted materials or unsellable materials as part of the project. And then you have a proxy. A proxy is normally used by most consulting firms or accountants when they're doing your shred claim, which is about 55% on top of your salaries to cover overheads, electricity, and things like that. So when you're doing these claims, if you're a small company, less than 800,000 of taxable net income, it's really important why you should be utilizing this program, because it is based on the work you've done, money you're getting back, and you're going to get back a cash return. In the early days, when you're a young company, a lot of your time is spent on R&D. It takes 18 months to maybe 3 years before you should get to commercialization stage. So if you're not paying yourself, you may consider of maybe doing that to utilize this program, first of all, because you're going to get 65% of your salary cost back approximately, 32% approximate contractor cost back, and 42% of material cost back. If you just take the low end on salaries, you sort of get a rough number of what you could be getting back on your return. So as a young company, if it's sweat equity right now, how can you maximize that? You're not paying yourself. But one simple way is, and most consulting firms and accountants won't educate you on this or mention this, is you can just pay the payroll tax portion on the salaries, and that'll be eligible salary you can claim. So for example, if it's $100,000 salary, payroll tax may be about 27,000 on that. You're going to get about 65% back of that as your return on eligible work that was complete for R&D. So if you're doing administration, definitely not. But if you're involved heavily in the R&D, it's worth exploring that. If you're a large company or foreign-owned, and there's a lot of foreign-owned companies right now coming through the startup visa program, you can still tap into this program. However, you get about 50% of the numbers I mentioned before, so 36, 18, and 24, but it gets applied to your tax credit. So it's still very lucrative, except it gets applied to your taxes. So it just reduces what your corporate taxes every year. Always a benefit to go into this program and utilizing shred. Now, another simple way to maximize your claim on tax credit claim. So this is one simple way on how to sort of expand your claim. Let's say you're a BC company, there's a federal portion and a provincial portion, and you had 100,000 in salaries, 100,000 subcontractors. If you do simple math there, your total refund is looking around about $97,000 with the provincial and federal portion. Now, if you were to do a little tweak, let's say if you were able to speak to your contractors, if they're on 3-month contracts or 6-month contracts, you can get the full, put them on payroll if they're happy to do that because they've got to pay taxes anyway. Now, all of a sudden, you're going to increase your claim almost by another $31,000 by just adjusting that. It's just a simple tip. A lot of companies are using short-term contractors and they're only working on this project just because they want to put them on payroll. This is the advantage of putting them on payroll if you're able to do that. So a simple tip on how to maximize on your shred. Now, the most important thing about it is when you are doing a claim or when you start doing R&D work, and if you haven't been doing, is documentation. So when part of the claim, you don't need to provide documentation as support when you're producing a claim with a consulting firm or doing it internally or with an accountant. However, if you get flagged for an audit, this is really important to have. And it's also important to have so you can actually track what you're doing through the year. So whether it's note-taking, issue in time tracking, or you have logins, or you have a vault for your coding, as long as it timestamp and show the iterations of what you're doing, right, and the costs associated, that's the kind of documentation you need. It doesn't have to be every single thing that's listed there, but it has to be a combination of 2 or 3 of these things. Prototypes, take pictures, making sure, just in case it gets damaged or lost, you have some sort of evidence that you did develop it. If you don't want to invest in fancy tools like Jira or Agile, things like that, it's really simple. Just create an email address to say shred at your company domain. Then any work that's associated with other conversations, just carbon copy that email address. If you have any meetings, send it to that. Photos, timesheets. Now, when you go to do a claim and you start working through it, and typically if you're going to go back 12 months or 18 months, like, what did we do before you file? Not everyone remembers all the failures. This way, you've captured everything, and it's easy to communicate with a consultant or internally as you're doing this to put your claim together. Now, when you are doing a shred tax claim, it's really simple. Identify the projects. You do technical interviews. If you're working with a consulting firm, this could take anywhere from 20 to 40 minutes, depending on the leads that are involved. So if it's 2 or 3 people, it's pretty straightforward. Combine it with the financial data and do the technical writer. Financial data will be your accountant or your bookkeeper or CFO that can provide the relevant invoices or salary that towards those projects. And you can do the calculation and then you submit the claim. What's really important about the project identification is if you're tapping for government funding, whether it's IRAP or any other grants, is to maybe change the name for a shred project versus a government grant. The important part of this is you can sort of claim on both programs to cover funding. If it's exactly the same name, it will cut into your return if you've received government grants towards that project. So simple ways, make your shred project name, the conversation about, or the topic about its the uncertainty or the problem, that the obstacle, because you're going to have a common theme. If you've got 30 projects, you've only got so much room you can write about on a shred claim. So the fine is the common theme, maybe across the 30 projects, there might be only 4, and that would be the shred project name. So just simple tips on how to sort of maximize on that. Now, I mentioned consultants several times because there are over 200 consulting firms in Canada that specialize in shred writing. We work with probably about 90 of them out there in Canada. And most of them will work on contingency fee base, and it will range anywhere from 10 to 30%, depending on what you want. My biggest advice is when you are working with a consulting firm, you want to work with a consulting firm that has a consultant or a specialist that understands your industry. The really important part of that is you don't want a consultant that's going to rely on you to write the technical report heavily because they don't understand the technology. Number 2 is you don't want them to Google translate the technology. You want someone that gets it straight away. So if you're in the engineering or the software space and the consultant you get has a background in software development or engineering, it's really easy to communicate how the project went. They can advise as well, and they can best represent the project, how it's going to be accepted by the CRO. So that's one important tip when you select it. When it comes down to the fees, it really comes down to relationship and what you think you get and the ease of it. 10 to 30% is out there. The average is currently right now between 15 and 20% on the success fee basis. And there are some firms that will charge you hourly or a fixed rate, but you can negotiate that with most of these firms that are out there. As I mentioned, there's over 200 consulting firms out there. So how does this tie into what I do at OKR? So we provide shred financing. So what that means is we advance the money while you're about to file or you've got confirmed numbers before the CRA pays you out. On average, it takes about 3 to 4 months to get your return from the CRA. When I was in the consulting side of the business, I've seen a claim being turned around and processed and funding received within 3 to 4 days from the CRA. I've seen 2 weeks, but I've also seen 6 and 7 months, depending on certain provinces. So what we do is we bridge that gap, provide you the money, we leverage the shred. What that means by leveraging shred is the only security we take. We're not taking personal guarantees or your house or your IP or equity. We take this as security, which most startups don't really have much security. And then we leverage that to provide your financing. Once you receive the money from the CRA, you pay the loan and you continue. What the advantage here is, it allows you to reinvest in your company quicker, hit certain objectives really quicker, whether it's hiring or marketing, market penetration. And that's why we exist, to do this. Okay, government grants. Now, I haven't seen any questions yet come through, but if there are any, don't be shy to ask on anything that I've spoken about so far. So we're going into government grants landscape. Real simple. If you're doing any of these following with your project, there's a high chance there's government funding out there. Having a regional impact, improving your competitive advantage, exporting, hiring and training new skills, or being innovative. Now, when I say this, it's because there's money everywhere for various different random things. Even if you're in the arts industry, there's funding for being an amateur artist or touring. So it really comes down to industry. But there's 5 key areas where a lot of the money's in, and I'm going to touch on that today. So there's over 2,500 federal and provincial programs available. So there's a lot out there. And 90% of the programs that you're going to see out there need some sort of a cash contribution to qualify. Why does that exist? So about 6 or 7 years ago, there used to be 100% funding available for many programs. But a lot of companies were misusing that funding, not using it where they asked for or where it's supposed to go per the project. So the government decided, okay, we need some sort of skin in the game for you to be involved. You've got to think the government as an investor, they want to invest in companies that are actually going to have a focus on growing a Canadian business and hire Canadians or residents to grow the business. The reason they want to do that, you have Canadian sales, you have Canadian payroll taxes, and it all goes back into the system. If a company doesn't have that vision, there's a very small chance that you're going to get approved for funding, especially on the larger programs. So you've always got to make sure you're saying that same story of growing a Canadian company for the economy and payroll taxes. 95% of the programs available right now are non-refundable grants. So they're not loans. You're not paying it back. As long as you're using the funds as you said you're going to use them, you're not paying it back to the government. So it's really useful to try and explore this avenue, try and get funding to grow. Now, the major difference between a government grant and a shred tax credit is the shred tax credit or the digital media tax credit is an entitlement. If you tick the boxes and you've spent the money on those categories, you have a right to get that money back every year. It's your entitlement. Government grants are a little bit different, and I apologize if there's any government reps, ITAs on the call. It's more like the mafia, the mob. I describe it. It's all about relationship building and being liked to make sure they believe in the project that you're doing. If you're able to establish that relationship, especially with these larger programs, you have a higher chance of getting funding. So you really have to make sure you're ticking all the boxes, you're hitting the criteria, and you can talk about it and showcase how this works. So how do you navigate these programs? So you've got the government websites, you've got the Canadian website, CRA, various different government programs out there, and you can navigate that. Sometimes it's not updated, or you go in there and it says, oh, status is closed, right? So you're like, okay, there's 15 programs, but 11 of them are closed, right? No good to me. The government is trying to do a better job of updating the statuses in their sites, but they're still behind in doing that. But that is one resource if you're going to do it internally. Your second resource, if you want to be a little bit more successful, is your consulting firms that do this day in, day out. You've got firms that are applying for IRAP funding, HR funding, wherever it is, every day. So that's the best way of sort of representing you, advising you on how to get more success out of the applications. They work on contingency fees, and some of them work on hourly, but there are out there to do that. And then you have funding portals or program websites themselves where you can go through. The funding portal is an interesting one, and I'd probably say the most user-friendly platform that's currently out there is a platform called Hello Pocketed, a BC-based company. It's free for startups and young companies. Log on, get a user, and it's a bit more tailored to exactly what you can apply for now, not what it could apply for, what's open, and to exactly what you're doing. So the portals are helpful as well. Again, if you're doing it internally, this is a cost-effective way of going through it yourself. But if you don't have the bandwidth, I do recommend consulting firms. It's the best way. And then events. You'll have a lot of program managers showcasing at events like VSW this week, Can Export, IRAP. You'll meet them there. NRC has a various different variety of programs. Meet with them, agri-tech programs. They show up everywhere. Have a conversation, see if you qualify, establish that relationship, even if it's further down the line. So best way to prepare for government funding, even before you use a portal or a consulting company, I would say develop a mini business plan. And the reason we do this, you want to focus on a 3 to 18-month business plan. As I mentioned, 90% of the programs, you need some sort of a dollar to dollar match. And if you're not spending, you have to focus on spend on how you're going to grow the business, there's no way you're going to navigate the government grants or get funding approved. Also, the business plan is good for you as a foundation to sort of say, okay, it's a mini one, it's just high level, but if things change, you're better for a new market. It allows you to adapt to the plan, go back to the government grant, say, hey, look, we're going to now focus on a new market. Is there any funding for that, for various different activities that we do? Biggest tip would be a lot of the programs are not available all year round. Some of them only have a 1 month window or a 2 month window of opportunity. So you really need to have applications ready at least 2 weeks before the funding opens, because many of these programs are going to be first come, first serve. And if you're too late to the gate, if you're asking for $100,000, you may end up getting just 10,000 or nothing because good budget's already been spent. And engagement with a program manager for all the lucrative programs, the high funded program, anything more than $50,000, reach out to a program manager before you start writing applications, because there's a higher chance if they recognize a name, it's going to go to the top of the pile and they're expecting it, and they may have verbally given you an approval on amount of funding once the paperwork's in, just to verify. So definitely engage with a program manager. So 5 areas of what the funding is. First one is research and development. R&D, there's a variety of different programs. The most common one known is IRAP, but then again, it depends on which province you're in as well. A lot of different provincial programs available and industry-focused R&D programs available as well. Large ones like the Strategic Innovation Fund, the Agri Innovation Fund, they're a bit more focused. You've got the super clusters as well. And then you've got some other smaller ones as well that's available out there as well. So R&D is probably one of the largest funding available. And then you obviously have the tax credit shred, which is there as well. The next area is HR and training. Again, when I mentioned, when you're talking about growing a company, hiring is a big factor. Majority of the programs, especially in BC and federally, you have to have candidates 30 or under. They can be skilled or unskilled depending on the grant. And university students, right, for R&D work or summertime work, there's various different factors, but the number one is they've got to be under 30, Canadian citizen or resident. They cannot be on work visas, student visas to qualify for the grant. So you just got to remember that when you do apply for funding. There are government grants available anywhere from $5,000 to $105,000 in hiring, depending on the type of hiring job descriptions out there. If you're going to be doing a lot of internships, summer's coming up, the SWIP program or WIL is really, really good. You can get anywhere from $5,000 to $7,500 per intern, and there's no limit on that. You can have 20 of those if you've got a project to get off on that. Then you've got commercialization. So if you're doing anything to do with commercialization and marketing, there's a variety of programs. The most common one is probably Can Export. If you're going out there, and I would advise, take a look at that program, especially if you're looking to get into America or Mexico or anywhere in Europe. There's 2 streams in Can Export. There's also one for R&D collaboration. So if you're going into a new market to do some R&D as well, there's money available for that. You get about $75,000 with a 60-day approval at the moment. And I've heard some people are getting an approval within 30 days as well on that program. But again, there's other smaller programs. There's domestic ones as well. If you're in agriculture, you have Buy BC and some other little initiatives there. So an area where there's a lot of funding available. If you're in the right spots, EDC also has a variety of programs if you're exporting as well to assist with costs and to growing your business. And then you have capital expenditures, more focused on manufacturing agriculture for this funding. But there is money out there if there's a large spend and you're growing a large site. If you're a small organization trying to get some R&D equipment, you're more likely to get that through R&D grants versus capital expenditure. But if you're slightly larger, just about to expand and make some heavy investments, there may be a chance, depending on the industry, you can get funding out there. And then green initiatives. This is probably the biggest mandate nationally right now. for all the provinces to sort of focus on, whether it's in agriculture, creating a carbon footprint. There are a lot of programs and a lot of money being thrown into this industry at the moment, or this initiative. So if you're anywhere in the green space, definitely take a look. New programs have come out. There's going to be a few more new programs coming out in middle of June. So reach out, look for these. Could make a major impact on what you're trying to do. The funding is anywhere from $50,000 to almost $10 million, based depending on what project you're doing and the initiative you're driving. So I mentioned consulting firms out there. Here's a few there. There's a sponsor there right now. Granted.com are a sponsor of VSW. You've got Aiming, Novellum, Northbridge, Stratasol. One of the big four are now doing government grants as well, which is Deloitte on a national basis. So, consider them, talk to any of these guys, depending on what your industry is on. Again, contingency fee based for most of the programs. There's probably just about a dozen or slightly less than a dozen programs that doesn't allow contingency fee based on the rules of the grant. So how does that work with government consultants or consulting firms? It's literally, they will prep you to try and get a verbal approval. Once you get a verbal approval, you can negotiate how much they will charge to get that work completed for that application. Or you can charge a fixed fee by the hour for the work that's been done. So you can utilize them just as a grant writer. So there are firms out there. I'll probably say there's about 50 firms that do government grants. And then you have a lot of individual grant writers that are out there as well now doing these things as well. So how does it tie into OKR? So I've mentioned there's 5 common grant areas, which we have a major focus on as a company as well. But what happens is with a lot of the dollar-to-dollar match programs, a lot of companies will qualify on the technical side and personnel. They just don't have the matching funds. So that's the first thing I can do at OK is I can provide you an LOI to do the cash contribution to get approved for the funding. So that's one hurdle that I'm sort of unlocking for the young startups. If they don't have cash, but they can qualify for grants, is doing that. But then what happens with a lot of these government grants, and I'd say most of them, is you don't receive the money up front, especially the larger ones. They give it to you either in monthly or quarterly tranches to say, okay, this is how it works. And you submit a report, spend money, and then they reimburse you, which can take anywhere from 25 to 90 days to receive a reimbursement. So that's sometimes for young companies, there's a cash flow fall there again, because they can't utilize the program because they don't have the money. So again, just like the tax credit, we can take the grant as an approval, as a security, and then we will leverage that to provide you financing so you can go utilize the program. Our terms will be based either on the milestones, sort of similar to the program, or to when the tranches have sort of been approved on the financing or the funding. So you can utilize it appropriately and grow your business. So the next area is asset-based lending. And then what we do on the asset-based lending is, as I said, it's really traditional. It's where the banks and BDC can't help, we sort of step in. So traditionally it's inventory, capital, land, equipment, things like that. That's really cool. We'll come in. And what happens is when you go to a bank, if you haven't been in business for 2 years and don't have any financials or revenue for about 18 months on the minimum, they're probably going to turn you and say, when you get to this stage, come back to us and let us know, right? Or you don't have any T4 employees or nothing really to secure. So where do we come in with as a niche as OKR is we finance purchase orders and contracts. So if you've landed a contract and you're a young company and the bank still wanting to, it's a $500,000 contract, I will at OKR. We will take a look at it. As long as you're working with the contracts with a company that's been established in business more than 12 months, it's not a startup, and we can verify who they are, we will finance the contract and we'll give you up to 70% of whatever that value is. So, if for a $500,000 contract, all you needed was $250,000 to actually meet the agreement, we'll fund that, go and do your job, go win that business and come back out there. We're not looking to be a long-term partner. We're looking to be there to get you to the point where now the banks and BDCs will say, we'll help you out and give you cheaper money, line of credits or loans that make sense for you to go and scale your business. But right now, a lot of young companies don't have the luxury and they're sort of stuck. This is where I can help out. So this is something we simply do. And then if your clients are outside of Canada, that's not an issue either. As long as you've got the EDC insurance, where the benefit is for you guys as well as us is if the deal goes sour or you don't get paid, you get 90% of your costs back on the EDC insurance. So definitely important to engage with them based on if you're doing business outside of Canada. And they also have some programs available which could be really beneficial and grants which are non-refundable. So this is what we do at OKR. It's a simple service, not more details required. If you have questions, just reach out to me directly. And then just a quick explanation on debt versus equity. So everything we talk about non-dilutive, it's debt, right? It's not debt if it's just a pure 100% grant, but if you're leveraging it, it's debt. And debt is always cheaper than equity. So what happens, a common practice with a lot of young founders that are looking to raise money at the moment, if you're at stage one, where it's concept of pre-revenue, evaluation, your company's about $1 million, you're probably looking to give away between 40 and 60% of your company in almost equity to sort of get what you want. Let's say all you needed was $500,000 to get to the MVP stage. So you end up giving away 46% of this company just for $500,000. If you can get the $500,000 through grants and loans and things like that, it's a lot better for you. So if you get to stage two, you're typically giving away 20 to 40% of your company in equity. Again, if it's only $500,000 you need, right, or $1 million, then you can get it through non-dilutive. Explore that, exhaust that. If you get to stage three and that's the real time to make a raise or your Series A and actually get this going to commercialization, your valuation's gone up by six times, but you only end up giving away 5 to 20% of your company in equity to get to where you need to get to. So sort of an important learning curve to say, okay, when do you raise money? And sometimes you have no choice. You have to go at stage one because all the avenues are closed. I would say exhaust all non-dilutive opportunities before you raise capital. So quick little table here, not going into too much detail. If you have 300,000 debt, 300,000 equity, yeah, you pay interest on the loan, let's say, for example, but at the end of the day, cost of capital is 6% versus 10%. The debt goes away, but while you've got those investors, you're going to always end up giving out 10% or more in cost of capital as you grow. So what makes OKR different? What we're at there? Well, number one is speed. All the non-dilutive I mentioned to you, we can process that and get you funded within 10 business days. So from start to finish, so key is to get cash through the door really quickly. That allows a lot of companies to plan their cash and their timing to get there. We have a hybrid approach. What this means, and I didn't go into our equity fund, but we can provide all three services in one shot where we're doing asset-based lending, we can do financing grants and tax credits, as well as doing equity investment if that's required to get the company where they need to get to. So there's a hybrid approach where we can look at all angles. Our number one goal is, even if someone comes to us for equity, is to even get them non-dilutive first, so keep control and retain more control as they can as they grow. And then we have proven leadership. Apart from the two founders and myself, the other two guys in our management team, which I'll get to, are all sort of leaders in what they've done, and our different experiences can give vision to a company to help them grow and scale or connect a lot quicker with what we do. Industries we work with everyone. We're not limited to, as long as you're leveraging so government funding, tax credit, or some sort of contract or purchase order, have something that we can utilize, we'll work with you. Industry does not really matter. We work with all of them, and just a little graph here just to show, yeah, we're not industry agnostic. Couple of testimonials here. So a little bit different here. So Culture Works, they actually finance the digital media tax credit. The reason that's really important is that program, that tax credit, unlike Shred, which is the averages between 3 and 4 months, the digital media tax credit can take anywhere from 9 to 18 months, depending on what stage you're at with the project and when you file. So again, sometimes to get cash flow, and it's a large cash flow, you can utilize that, and that's what Culture Works did. Access Labs did a combination of asset-based and a grant tax credit. The asset-based was really simple to describe. They got a $1 million order. They needed money and inventory to meet that order, and we were able to secure that and give them the funding to go and meet that. And to success, he's now changing company name, but he's growing rapidly due to that injection of cash to get that first order through. And then we also funded SDTC because he had a green initiative, and the second milestone, it's really big, needed cash flow, so he leveraged that to get the project going on the R&D side as well. Our team, just mentioned a few highly, Jason and Randy, well known. Douglas, he's been with our company almost from the start, the corporate finance director. It's him and his team that does the due diligence, and to process of loan within 10 days, him and his team process due diligence in very rapid time of 24 to 48 hours. So have a system and a way to get through all of that with legal. And then Bill Green's been a CFO for many years. He's been with Jason on various different companies and projects for over 15 years. He's worked with startups from writing grant applications to tax credits, all the way to being a controller for large corporations. So he's been there, done that, and he's a key member of our team. And then Wes Mills is our investment partner, part of our management team and executive, and He's been in the investment world for over 35 years, managed a portfolio of almost $45 billion for one of the largest banks in Canada. He joined our team about 2 years ago, around the same time as me, and his influence on how to structure, especially asset-based deals and be creative, because we're not a bank and we can offer different variety of making it work, is like, it's priceless for our company and our clients because of his creativity. A few of our key partners out there, as I said, we work with 90 consulting firms out there, work with a lot of the startup organizations, accelerators out there, presenting at a lot of events, so you may have seen us before. But we are working very close to the Canadian tech companies, and as I mentioned, we've got to deploy around 150 million. We sort of made a dent in that in the last couple of months, but we need to deploy that into Canada, and so we've got to work with our partners to get that money out there so we can grow Canadian tech. A big reason that's a focus is Canada's probably about 47th in the world for technology at the moment, and we need to get there into the top 15, top 10, and being part of this community is one way of doing that on growing Canadian tech. So just wrapping up here, 3 various services. Again, it's asset secured loans, equity financing, and then government financing is what we do. And if you have any questions, fire away. Willing to take them.
We do have one here, Bev. Earlier, someone had asked how they go about getting connected to a program manager.
So if you're talking about a program manager for a particular grant, is most of these grant programs will have a phone number for contact. You reach them, you leave a message, and they'll get back to you. If you're looking for, if you've had no luck, let's say with IRAP or something like that, get in touch with me. I might be able to direct you, or reach out to a consulting firm. They might have better luck. If you want to be connected to a consulting firm, for example, happy to have a quick initial call with you, find out what you do, and then connect you to who I think would be a better fit for your organization.
And there were a couple questions about the those grant funding programs. So I just want to let everyone know I've dropped the 2 links for Granted and for Pocketed into the chat. And that's all I see for questions right now, but keep them coming, guys. Bev's our wealth of information here. He knows everybody.
No?
I guess you just answered everyone's questions in the chat.
I hope it's been useful to everyone. I hope everyone has a good Vancouver Startup Week. There are many great events happening, and definitely if you're raising capital or trying to navigate that, go attend these events. Valhalla is hosting a really good one. That's another one of our partners that we work very closely with. Definitely recommend attending that event. You'll get a major insight. If you want to understand about due diligence, we have another event that we're presenting, which Doug's actually going to be hosting. I think it's a phenomenal event about understanding that one. But many great events happening, and if you're using this as an educational tool, try and attend as many as you can, because I think it would definitely benefit you guys as young companies to grow, to make sure you're taking the right steps and maybe not repeating mistakes that some of us have already made growing our businesses.